Let's talk about DeepSeek.
DeepSeek AI and its impact to US tech companies has been the talk of the town.
DeepSeek's latest AI model being more efficient while running on a lot less advanced NVIDIA chips, now putting pressure on the US tech names.
And while we just saw NVIDIA lose $600 billion of market value in a day and then recover some of those losses back, no one's talking about the real risk investors are taking on these tech stocks. Every technological leap we've made across history has a similar fascinating characteristic. DeepSeek is just the latest example of it. So while the impact looks pretty mild as the week comes to a close, there's good reason to believe that this is just the beginning. And when I say tech stock investors, I really mean everybody, because 30% of the US stock market rests on the decisions of a handful of companies. At the very start of this year, I made a very bold claim. Okay, I'm going to say something absolutely insane. I'm going to say the worst performer of the S&P 500 is going to be NVIDIA. Yep, you heard correctly that NVIDIA stock will be the worst performer in the S&P 500 this year. A crazy call considering NVIDIA has been booming off the back of their far superior graphics chips, like the H100 GPU that big tech have been buying in the hundreds of thousands as they race to build the best AI model. The stock is up 2,000% in the last 5 years and has doubled in just the last year. Now, these predictions we do every year are basically a joke, but with the events that have unfolded this week, suddenly that prediction doesn't seem completely insane. The US stock market opened Monday to a bloodbath, more than $1 trillion of value wiped out on the day, with most of the damage being taken by NVIDIA, which dropped 17% to $118 a share and lost nearly $600 billion in value. That's the steepest one-day drop from NVIDIA since March 2020, and it set the record for the largest decline in value of a stock in a single day ever, beating its own previous record of $279 billion set a few months back. Now, they have recovered some of those losses at the time of recording this, but they're still starting 2025 in the red. And it wasn't just NVIDIA suffering this week. US tech stocks across the board took a hit. Meta, AMD, Microsoft were all down on Monday, although some of them have bounced back, and it also shook global chip stocks like ASML and ARM. Of course, Nancy Pelosi, the greatest investor of all time, got out just before the crash, and we all should have known this was coming anyway because Jim Cramer tweeted that it was due for a surge in price just a few days ago. All of this shakeup in the global financial markets is because of DeepSeek and the release of their latest R1 artificial intelligence model, a Chinese competitor to OpenAI's ChatGPT, Meta AI, Gemini, and Claude. Which that in of itself teaches a valuable lesson about stocks, that even if markets are pretty efficient at pricing the value of companies, the market can only work with the current publicly available information. If you're a hardline efficient market hypothesis believer, then you think stocks are always fairly valued. That because there are many people assessing all of the publicly available information about the company, that it's not possible to pay too much for a stock. But even if that was true, which it's not, but even if it was true, there's always new information coming out about companies, and some of it can cause a sudden change in the ability of a company to produce profit for the investors. And this DeepSeek announcement is a perfect example of that. DeepSeek is a Chinese AI company started by Chinese hedge fund manager Lang Wenfang. He manages $8 billion and created DeepSeek essentially as a side project in their AI research unit. According to the company, they trained its flagship V3 model in just 2 months and with under $6 million. And their latest reasoning model, R1, is essentially on par with OpenAI's largest reasoning model, O1. It matches them across a number of different benchmarks, and it's even beating them in some coding, mathematics, and reasoning benchmarks. And it does all of this at a fraction of the running costs and without NVIDIA's fancy $40,000 H100 chips. I'll come back to this in a bit because there is some speculation that they may actually be using those very high-end NVIDIA chips. The difference in their API prices is startling. Per use output pricing for DeepSeek is just $2 per 1 million tokens compared to ChatGPT O1's price of $60. A token, for those unaware, is a measurement for the smallest unit of text that a model can recognize. So when you ask a question, it breaks the sentence down into chunks that it can recognize, like individual words, numbers, and punctuation marks. And then it does the same thing when it spits out an answer. But not only is it cheaper to run by a large margin to its US competitors, it's also open source, meaning if you have the right hardware, you can run the model locally on your own computer. And the R1 DeepSeek model running on their servers is free to use. ChatGPT's comparable model is $200 a month. Now, using DeepSeek AI on their Chinese-based servers does have some limitations, but for most people looking to use AI on a fairly casual basis, it's a great alternative. And it's become incredibly popular, surpassing ChatGPT and reaching #1 on App Store charts. All of this is a huge shakeup to the AI industry. But I want to talk about the specific threat DeepSeek poses to Nvidia, OpenAI, and the other big US tech companies. Because understanding the precise changes here teaches a really powerful investing lesson that applies to all stocks. As it currently stands, US tech companies like OpenAI, Meta, Google, and Nvidia are expected to be the biggest beneficiaries of the artificial intelligence revolution. OpenAI, Meta, and Google, for example, are racing to build the latest and greatest AI models that consumers like us can use in a variety of ways: researching, writing, coding, problem solving. And other businesses also want to integrate these models into their own services, like tailoring a version of ChatGPT to make a virtual assistant. But training and running these models uses a huge amount of computing power, which is where Nvidia comes into the picture. Their high-powered graphics chips, such as the H100, are currently the best at handling the intensive computations of AI algorithms. And there's no other chip maker that's even close. So Meta, Google, OpenAI, Microsoft have all been buying tens of thousands of these chips, spending in total tens of billions of dollars. Take a look at Nvidia's revenue segments. Just a few years ago, they were selling a couple billion a year in data center chips, less than the chips they were selling for gaming PCs. In 2023, they did $61 billion of revenue, $50 billion of which was data center chips. And last year, they're estimated to have done about $129 billion of sales. We'll find out exactly how much in February when they release their results, but they will have done more than $100 billion of data center sales that year, most of which is big US tech building out their AI infrastructure. The idea being that because these AI models use so much computing power, no one will be able to compete with their deep pockets, and therefore people will have to pay to use their models. But DeepSeek just showed the world that they can create a better model without billions of dollars of Nvidia chips. In a research paper they published, they talk about using new model training techniques, using less supervised data and more reinforcement learning. In a really simplistic way, this means instead of telling the model directly how to solve a problem, you just provide the model with the right incentives and let it figure out how to solve the problem itself. They found that the models actually developed better problem-solving strategies this way, such as it allocating itself more time to reevaluate its initial approach, something DeepSeek is calling an aha moment. And the result, according to DeepSeek, is a much more cost-efficient model. The implication being that if great AI models can be built and run with far less computing power, why would anyone pay OpenAI $200 a month? Just use a free version, or even run your own model locally since DeepSeek is open source. And if Nvidia's super expensive chips aren't actually needed to build and run these models, how many are they going to sell in 2026, in 2027? By 2026, the market expects Nvidia will be selling more than $200 billion of chips every year, and that's already baked into their stock price. So it's certainly not out of the realm of possibility that the big tech companies start buying a lot less Nvidia chips. And in that world, Nvidia's stock price is completely full of air. I'm certainly not predicting that this will happen. I have no idea what will happen, but that's exactly the point. Big, unforeseen changes are extremely common when a new industry pops up. Our current views of which companies will benefit from AI and how it will change our lives are almost guaranteed to be wrong. Most of the biggest beneficiaries of the internet didn't even exist during the initial boom of the late 90s. In the 90s, it was companies like Cisco. They sold modems and routers, the infrastructure of the internet. They were the most valuable company in the world at the height of the bubble. But then smaller competitors found much better ways to process IP, and Cisco's advantage was wiped out in a couple of years. And 3 decades later, when someone says internet companies, do we think of modems and Wi-Fi routers? No, we think of the companies that used the infrastructure to build internet services that couldn't even be imagined in the 90s. The same is likely true for AI. I should mention that there are quite a few caveats to the hype around DeepSeek. Firstly, there's the claim that they were able to train their models without the expensive H100 chips from Nvidia. This is believed because the US has strict export controls that prevent Nvidia from selling H100s to Chinese companies. But Nvidia can sell them H800 chips, which are only slightly worse than H100s, so it's not as profound as some of the headlines are making it out to be. Secondly, there's a lot of speculation that DeepSeek does in fact have loads of H100s anyway. Founder and CEO of Scale AI, Alexander Wang, who is also currently the youngest self-made billionaire, said on CNBC that DeepSeek has about 50,000 of the high-end Nvidia chips. Thirdly, some industry experts think that DeepSeek used what is called knowledge distillation to train their models. This means using answers from an existing model, like ChatGPT, in order to develop a new one. Something that OpenAI is claiming could be intellectual property theft, as it violates their terms of service. Which of course is a hilarious irony considering they most likely trained their models on copyrighted material. And then there's something called the Jevons paradox. The CEO of Microsoft posted on LinkedIn and Twitter, "As AI gets more efficient and accessible, we will see its use skyrocket, turning it into a commodity that we just can't get enough of." The theory is that when technological advancements make a resource more efficient and therefore cheaper on a per-use basis, overall demand increases by a larger margin, resulting in total resource consumption increasing. So in this case, DeepSeek's innovations in AI model training look like they may dramatically reduce the cost per use. Intuitively, this means tech companies may have overspent on Nvidia chips, but it may just mean that the possible uses and demand for using AI models increases more quickly. It's valuable to know that the way things happen in markets and the economy don't always happen the way we intuitively think it will. And so you can't really rely on your gut when assessing some of these companies. Look at the data and look for similar patterns across history. Subscribe if you enjoyed, and here's 2 more videos to check out next.